All right, about to go short NASDAQ here. Looking for lower prices. Entering off of a inversion fair value gap during the 950 1010 macro. Targeting a set of relative equal lows directly above the first presented fair value gap at 931. I like how we had traded below that inversion fair value gap, back above it. Traded below it once more and back in towards its consequent encroachment, and then we started closing the lower half. And that's price showing its hand to me that it wants to go lower or potentially wants to go lower. So I decided to enter, and being that it's during that 950 1010 macro, that's when price likes to spool. And at open, we directly shot up. I mean, we shot up at around 9 o'clock. And then at open, we consolidated a little bit and then shot straight up, taking out previous day New York PM session high. And there's me labeling those relative equal lows. So whenever we shoot up like that, I'm suspect. I'm not really fond of going with the trend. I see that as manipulation, as them trying to entice traders in long to trap them. So decided to wait for the next macro, see if there's an opportunity. And I liked this. I saw a classic accumulate during 930 or prior to 930, run up at 930, entice traders long, and then distribute. So that was kind of my play on this. And I like that we had that consolidation on that 15-second chart, and we had those relative equal lows, and it was all directly above the 931 first presented fair value gap. So I really like that as a draw on liquidity. So price right now is trading up into, you'll see me label it in a second, a SIBI that I'm going to label and treat as a breakaway gap. I want price to stay obviously below it. We trade above it for a little bit here. But there's also another SIBI, I believe that's a SIBI directly above it. And so I'm aware of that as well. I move my stop to break even here at this point. And I'm just at this point this is the best part of the trade. No risk. So it doesn't matter what happens. I'm risk-free on this trade. So I'm bearish on NASDAQ. But we are, if you look at for example, the daily time frame, we're kind of trading in this like sideways, I don't know, barcode-y layout, I guess, or it just doesn't look, I don't know, it just doesn't look good. So it's hard to read. So whenever you're taking these trades, I'm noticing it's better to just look for those low-hanging fruit objectives. It's something I'm trying to remind myself. This is in my live account, by the way. I didn't trade evals today. So on my live account, my rule is to trade 1 micro until I get good at trading 1 micro, and then we will move to 2 micros. So if that takes another year of me trading 1 micro, then so be it. My job here is to stay liquid, protect my capital, and develop my model, So I like how we traded above that breakaway gap. We lingered around in it for a little bit, but eventually we closed below. And I'm treating this kind of like as like a Judas swing. And we have a couple multiple Judas swings in there. But again, I'm break even, so risk is removed on this trade. I was at the gym when I took this trade, and I was obviously done with my workout, but I was like, let me just look. I knew it was that 950 1010 macro, And I saw that, and it just looked so clean for me. Just accumulate, manipulate, distribute. I saw my PDRA that I prefer, which is the inversion fair value gap, and decided to take a trade. I like that we're beginning. Oh, beautiful. I like that we're closing below that breakaway gap. And at this point, I want to see large black candles. ICT refers to them as black limousines. That's what I want to see. Move my stop, secure a little bit more profit above those highs. Now we're down for the month in the live account, but again, we're trading 1 micro, so it's doable. We're just trying to stay consistent with our trading. And there she goes. That's all she wrote.